All right, it is almost 6 o'clock, so I want to go ahead and get started today. Good evening, everyone, and welcome to our first homebuyer webinar call of 2024. We did take the month of January off and kind of retool a little bit, and we're coming back with a bang. Certainly, we have a great lineup today, and I do want to welcome you all to the call this evening, and thank you for sharing this time. We're starting off at 6 o'clock today, of course, and that is new for us. So certainly we are excited for this evening to see if we can garner some more interest and maybe make it more efficient for you to attend. Our next call will be at noon next month, so please watch for that. Again, my name is Dan Sugg, and I'm the Chief Mortgage Lending Officer here at Michigan First Credit Union. And I have an office here at Evergreen where our mortgage team headquarters is, right behind the coffee shop if you ever visit here. And I want to take you through our agenda today. I'm going to introduce the speakers next, and then we're going to cover probably our most well-attended topic of any of our homebuyer webinars, and it's MSHDA, the Michigan State Housing Development Authority. That'll be the meat of our conversation. And at the very end, we'll have our closing tips and tricks as always. So the three things that we want you as members to take away. And then if we have time, we'll do our closing remarks and question and answer. So with that, let me jump right into the introductions. Joining us for the first time in our webinar series is Eric Huffman. Eric is a loan officer with Michigan First, and I want him to tell you a little bit about what he brings to the mortgage industry and to Michigan First, and then certainly what he offers our members. So Eric, welcome to the call, and tell us a little bit about yourself.
Hi, my name is Eric Hoffman. I've been in and around real estate. I was real estate for 8 years. And then I switched over to lending in 2020. So it's been about 3 years since I've been in lending. I have two boys. I have one that's a freshman in college, and I have another 8th grader. And what I do in my spare time is both of my kids play basketball. So play a lot of basketball, coach baseball, coach basketball. I love to barbecue. I'm competition smoker. So that's a little bit about myself. And I just really like working at the credit union because I feel that this place has a lot to offer as members, and they help out a lot. You know, they're a credit union, and this is what they're here for, is to help you.
Yeah, thanks, Eric. And I do see some chats that a few of you are having issues hearing. Just maybe check your settings and your speakers, because we are, I believe, projecting the sound. So hang in there, and just know that this is recorded. If for some reason you're having technical issues, well, it is recorded and you'll be able to view it later. So thanks, Eric, for joining, and we appreciate that. And thank you for coming in at 6 tonight. So next up in our panel is Darren Montreal. Darren is actually a veteran of this homebuyer webinar series. He has represented MSHDA for us for a number of times. Darren, if you could turn your camera on, I think it will help. Maybe pop you up for everyone to see.
Oh, my camera's on, I hope.
I can see you now. Absolutely.
Okay, perfect.
Coming through now. So Darren, I've certainly known you for a while. Tell us a little bit about MSHDA and yourself and what you offer our members.
Okay, well, I'll start with saying I have 3 teenagers, so I don't have any hobbies. I basically chase them around the state. And myself, I've been in the lending industry now over 20 years. The last 10, I've had the pleasure of working with MSHDA, and our focus is helping people overcome the obstacles and obtain home ownership. So that's a little bit about me, and I appreciate the opportunity to be here and speak on our product to you, your team, with your team and your members.
Yeah, welcome back, Darren. We appreciate that you're here. I shared a fact with Darren earlier when we were prepping for this call that in 2023 we helped our members obtain about just over $1 million in grant funds from different organizations, and most of that was from MSHDA. So we certainly have a lot of experience in that. So I want to start our questions today. Let's start on the mortgage side, Eric. You're the new person to the call. So talk to me a little bit about qualifying for, even thinking about a MSHDA loan. What does that process look like?
Well, first thing is you either got to reach out to me at Michigan First or another loan officer at Michigan First. So the biggest thing is we got to figure out your debt going in, your debt going out. So it's a debt to income and what you're making per month. And then on top of that, we have to figure out if this loan fits you. And if this loan don't fit you, other loans do. But the biggest thing is we have to pull credit just to get everything rolling and just kind of give you a bunch of information on how to because every loan's different. So this might not work out for you, but there's a lot of other things that do work out for you. But that's the easiest way is let's reach out to a lender and get moving in the right direction.
Yeah, and certainly MSHDA is a great tool. It's one of many we use here at the credit union, but it's a great place to start, certainly at looking at maybe in a place for an available down payment. So in that regard, so I'm gonna move over. Thank you, Eric. I'm gonna move over to Darren just real quickly and tell us a little bit about what MSHDA stands for. I said it earlier on the call, but what is kind of the mission of MSHDA?
Okay, so MSHDA is the Michigan State Housing Development Authority, and we're the state's housing finance agency. So we're involved in all things housing across the state. So of all the projects that we work with, one of our main focus is, and has been since I've been there, helping home buyers overcome the obstacles that are in their way when they're trying to obtain a home. So we have products, we sponsor counseling services, we sponsor education seminars, and we work with a network of lenders such as yourself to try to make sure that home buyers have every opportunity to have the appropriate tools to get into a home.
Yeah, and your mission is, among other things, residential or home buyers, right? First time home buyers or any really home buyer in targeted areas, which we'll talk a little bit about going in. But you also do other types of development also in the state, right?
Oh, right, sure. And like I said, we're involved in all things housing. So from affordable housing complexes to rental assistance. But I'm with the home ownership division, so we're focused strictly on single family owner occupied homes and trying to find ways to get people into those homes.
That's right. Yeah, absolutely. So tell me, what is if I think MSHDA for our members, I think DPA. So tell me, Eric, I'm sorry, Darren, a little bit about what is a DPA loan and how does that work from a MSHDA perspective?
Okay, so a DPA loan is, again, an acronym for a down payment assistance. It is a loan, and think of it as a tool. It's a tool to help you as a buyer make a more competitive offer on a home. In this market, it's very important to put your strongest, your best foot forward right out of the gate. And our down payment assistance loan is something that you can combine with the assets and the resources that you have to make a stronger offer, to be able to afford more of a home. And the terms, they're favorable. It's a 0% interest loan. You never have to make a monthly payment on it, but it is a loan and it has to be repaid. But again, it's just another tool in the toolbox for a lender such as yourself to offer buyers to be able to figure out what is their best fit.
Yeah, and if we didn't say a DPA is down payment assistance, so putting you as the borrower in a position to offer a down payment that's not your own money. You're borrowing the down payment, but the great part is it doesn't have a payment or has 0% interest. So, Eric, with that in mind, talk to me a little bit about. Do I need any money to get into a MSHDA loan then? If they're giving me the down payment, what could I need to buy a house then?
So you need to have 1% down. That's required from the borrower is 1% of the purchase price. So to make it easy, if it's $100,000 home, you'd have to bring in $1,000.
So you're telling me with a MSHDA program, if I buy a $100,000 house, all I'm required from my own funds to bring in is 1% of that down payment.
Correct.
Great. And then what does MSHDA cover then? What is the amount that I could get from MSHDA?
You'll get up to $10,000.
So that's $10,000, and where can I get a home that I can get a $10,000 down payment from?
You're not going to find much.
No, like what areas can I buy in, I guess?
So you could buy anywhere in Michigan. If you're looking for that kind of loan, it's just you can buy anywhere in Michigan. You got your Detroit, your Grand Rapids, anywhere in Michigan, as long as you're in Michigan, you can. That's where the down payment assistance is offered.
So there really is no restriction from a zip code perspective to get that $10,000. That's great.
No.
Awesome. So let's move on a little bit more about MSHDA from a lender perspective. Darren just told us that it's not free money. We don't have to make a payment on it. There's no interest, but is it forgivable? How does that work? What happens to the 10,000?
So it's not forgivable, but the thing is, if you ever sell your home or you go to refinance, that's when they recapture their money. So if you stay in your house for a long time, never do any refinance or sell it, then you don't have to recapture that money.
So it's like pay me later then. So
Yep.
when down the road, if you will. So Darren's not going to come knocking on my door in 2 years and want that $10,000 back. But if I ever decide to refinance, if my house gains value,
Yep.
I'm able to refinance into a different loan product, then I would have to satisfy that lien against the property. Is that correct?
Yes, right. And then also too, the best thing about it, I think, is that you're not paying somebody else's mortgage. Now you have your own mortgage instead of renting where you're paying 100% interest and then you're paying somebody else's mortgage on top of it. You're not, paying your own mortgage. So that's the best thing too, especially for just 1% down. I think it's a huge advantage.
Yeah, it removes the biggest barrier. I'm sorry. If we can make sure, I get that one muted. It removes the biggest barrier, which sometimes is, I don't have any down payment.
Right.
So moving back to Darren really quick, we've talked about a few of the benefits at the MSHDA loan, but from a MSHDA perspective, what do you see as the benefits for your product?
The benefits for our product is that we give the buyers the best opportunity to have the lowest possible payment, to get in using some of our resources to leverage our resources, whether they have 1%, if they have more. It gives them some flexibility on where and when they're going to buy a home. And because the program is statewide, you might want to move into a different community. You just don't have enough. You can buy where you've been looking now, but you want to go across the major road, or you want to go to a different school district. You can leverage our $10,000 to buy up, possibly knowing that that's not going to add to your monthly debt. Some of the other advantages to our program is that because we are the housing finance agency for the state, we have a unique ability to leverage the entire MSHDA or the entire housing finance agency's resources to offer you programs that you might not see other places. Just as an example, we have discounted mortgage insurance. So the private mortgage insurance, when you use our program, is going to be cheaper than you're going to be able to get it anywhere else. We leverage our resources to give the borrowers in the state of Michigan the lowest possible interest rates that we can find. So right now, if you're going to use or leverage one of the MSHDA mortgages, you're going to be lower than the mortgage market at this current point in time. So not only are you going to get down payment assistance, discounted mortgage insurance, but you're also going to get a below market interest rate, giving you the best possible payment on your mortgage, and it's going to increase your purchase power in a unique position that you're not going to be able to get anywhere else. So we feel like we're giving the people in the state of Michigan all the advantages that we can right now.
Yeah, it's interesting. Most conventional mortgages, the rates change now daily, sometimes 4 or 5 times during the day. So depending on whether you call in the morning or the afternoon, that rate's very liquid. And with MSHDA, it's not the case. It generally stays the same for periods of time. Is that correct?
That's correct. We have a lot of stability in our rate because of the way we execute and the fact that we're leveraging all of the resources that we have at MSHDA. So we can go months without our interest rate changing. So everything that you've read or you hear about the instability in the financial markets, that doesn't affect our ability to offer these programs on Michigan properties.
Yeah, that's great. Thanks, Darren. So we just covered a lot, Eric, but if we think about MSHDA, is that an FHA or conventional loan, or can it be both?
You could use it with an FHA or conventional loan, or even like your veteran, your VA, your USDA rural development. You can use it towards any of them 4 loans.
So in conjunction with any of those loan programs. So certainly we can dive into that maybe on another call, what would drive you between the FHA and the conventional, but it is available with all those different ones. So there has to be a catcher. This sounds almost too good to be true. So let's talk about some of the details that comes with MSHDA. What's the minimum credit score for getting MSHDA? I've seen a couple of questions in the chat box already. Like, what does my credit score have to be to do the MSHDA loan?
Yep.
Right. So yeah, we can go over. Oh, I'm sorry, Eric. You want this one or?
Yeah, let's
Nope.
let Eric answer this one, and then certainly have you come back and clean up.
Sorry. Minimum credit score is a 640.
So 640 on that FICO score is a minimum credit score. And what is another Eric? What's another tenet of the program that has to be adhered to? Is there? I believe it's DTI, right? What the debt to income ratio has to be below what?
45%. Rule of thumb is $1,000. You can have $450 payment. Yeah. You know, if your income is $1,000 a month, your payment couldn't be over $450 with, like, if you had a car payment or something like that. But that's how debt to income is. It's 45% of your income.
And that's a hard line, right?
Yep. That's not a point over. Nothing.
Yeah, and while we're talking about that debt to income, it's a little different than what you would get on a normal loan, right? It includes other income in the household, correct?
Yes. Anybody over the age of 18 that are not full-time students, they have to be on a loan. And then if they're not full-time students, we got to take their income too.
So let's talk a little bit. Let's break that down a little bit so people understand, because that's different than normally we see in a mortgage transaction. So let's say I want to buy my first home, or even another home that's my primary residence, and I have an adult son or daughter that are living with me, and they're working on their own, trying to save up some money. Does that money count against my DTI too? How does that work?
So they will have to take the income of that borrower. They won't be on the loan, but it will go against the income because they have limit incomes too from MSHDA, and you got to be below them incomes. So that's where it could hurt you if you make a certain amount of money and you have somebody over 18 living with you.
So there are limits to the amount of money that can be earned in the household to be eligible for MSHDA. So Darren, maybe jump back in now and tell us about some of those limits and what those look like.
Okay, so there are some limits and there's some restrictions to who can qualify for the program. This is not a low-income program, it's an affordable income program. So just to give you an example of some of the income limits for Oakland County, which is primarily where we're based, and it'll give you a good barometer for the Tri-County area as well. But in Oakland County, our income limits go from a household making $94,700 all the way up to $132,580. So you can get a lot of people to qualify for that. Now, we mentioned the 640 credit score. That's only for the primary borrower. Not everybody in the household has to meet that 640 requirement. So if somebody heard that and didn't, felt like not everybody could meet that, don't adverse yourself. Make sure you call Eric and talk about it and find out if you qualify, because not everybody has to meet the requirements, but everybody's income has to be looked at to see if you qualify for the household income limit. One additional restriction that I think is worth mentioning is that we do have a statewide sales price limit at $224,500 right now. So a $224,500, depending on which community you're looking at, might not buy as much house as you think you need right now. But please keep in mind that we're working on, with our state legislature, working on getting that number moved in the not too distant future. So hopefully that's going to go up, and you'll be able to use all of your income to qualify for hopefully a more expensive house, if that's something that you want to do.
Sales price, yeah. So, yeah, that's certainly, we've talked a lot on this webinar series about affordable housing and the need for affordable housing, and I think 224 is a bit restrictive for your program. So let's hope that you guys have some luck in getting that moved. Certainly would be great to hear. A lot of questions in the chat box about income. Certainly there are many types of income, in fact, are eligible for being qualified to buy a home. So including retirement income and all those others. But there was a pretty specific question that I'll point to, really either one, Eric or Darren, that want to take it. Does disability income from a family member living with me count into that calculation for household income?
I'll take that one. So that would be something that would have to be disclosed. And we're not disclosing that at the same level that the primary borrower would, but we would need to account for it. It would be added in to the household income to make sure that you qualified for our income limits.
Yeah, perfect. Thanks. And thank you for the question. So I'm going to jump back to Eric real quick. So Eric, if I'm receiving child support or my child is receiving some sort of supplemental income, can I use that to help qualify?
Yes, you can. You just have to have a proven track record of getting it consistently. And then you have to prove that you can get it for 3 more years. So if your son's 16 or your daughter's 16, you wouldn't be able to use that child support. But if they're 13 or 14 and you got continuous payments, every month, like you continuously get them, then yes, you can use that.
Yeah, there's a good rule of thumb in lending, especially for mortgages and using income that you can use to qualify is you have to show a track record of getting it and then continuance. And it's usually 3 months and 3 years, 3 months of getting it at least, depending on some kinds of income. Self-employed's a little different, but certainly reach out to Eric or any one of our loan officers to talk through that and they can help. But certainly lots of questions coming in, so I appreciate those. And Zareen is our team member on the line is typing as fast as she can. So I'll try to grab as many as I can and put them in. So let's go back to Darren. We heard a little bit about targeted and non-targeted areas. And I want to touch base a little bit more on that. That used to mean areas that would get 7,500 or 10,000, but now it's 10,000 across the board. So what difference does targeted or non-targeted mean, and what are those areas?
Okay, so again, I'm going to use Oakland County as an example. Oakland County has both targeted and non-targeted areas. So a non-targeted area, we offer our program to first-time homebuyers statewide. So if you're in a non-targeted area, you get to still use the MSHDA program, and you don't have to worry about, if you're a first-time home buyer, you don't have to worry about whether you've owned a home or had a home ownership interest. But if we go to a targeted area, and the targeted areas in Oakland County are going to be the city of Southfield, the city of Pontiac, and Royal Oak Township, not only do we offer our program to first-time home buyers, but also repeat home buyers and current homeowners. So you could currently be living in a home and use the MSHDA program to buy your next home if you're purchasing in a targeted area. And just so, and I seen this on the chat earlier, couldn't help looking at that. Somebody asked what the definition of a first-time home buyer was, and it's anybody who has not had an interest in a primary residence in the last 3 years. So just as an example, I know sometimes people will put their name on their parents' home as some type of estate planning. If you haven't lived in that home in the last 3 years, for MSHDA purposes, we're still going to consider you a first-time home buyer. So I only mention that because I know people are all different and everybody's got a unique circumstance. Don't adverse yourself if you're not buying in those targeted areas. Call Eric and let him figure out if you're eligible for this program or not.
And Eric, Darren, really quick, is there a place on MSHDA's website that I can see those different areas? Do you guys publish that map?
We do, and you can go to the MSHDA website. You can Google MSHDA targeted areas, and it'll pop up. I tell people the best resource for trying to find out what programs available where is to call an experienced lender like Eric with a team or any one of the loan officers at your team, and they're going to be the ones that can do that legwork to make sure that they know exactly, because Southfield, Royal Oak, and Pontiac, it has to be in the city limits or in the township limits. It can't be mailing addresses. It's not zip code specific. So there are some details that you want to rely on an expert to interpret for you.
Yeah, to decipher that information.
Right.
That's awesome. Thanks, Darren. Back to Eric. Eric, probably the last question because we're getting close here. But if I'm using the DPA program from MSHDA, can I also receive a gift? How does that work?
Yeah, you can get a gift from a relative. It has to be a family member. It can't be like your friend down the road or anything like that. You have to get it from a brother, sister, immediate relative. They can give you the 1% plus anything else.
Yeah, and I know last year I started off the call by saying how much money we were able to help our members achieve or get or use for down payment. One of those programs was the Detroit DPA program. And, are we able to layer this MSHDA with some of those other grant programs? And how does that work?
Yes, you will. We'll be able to use them. So the nice thing too is if you did use them, if you don't need the DPA because you got your Detroit, it covered everything, your closing costs and down payment. We'd actually I believe they'll be able to give you a better interest rate because you're not using the DPA.
Yeah.
Is that correct, Darren?
Well, you could either get a lower interest rate, or you can again use the DPA and pay down that interest bearing portion and get a lower first mortgage payment altogether. So the nice thing is that there's a lot of resources out there. You got to contact somebody to figure out exactly how best to put the puzzle together.
Yeah, and while there's a great point, Darren, while there's a ton of information online, working with somebody like Eric or any of our other 30 loan officers here and understanding they deal with it every day and can help you navigate those questions. And just like that, it's 6:25. So I don't want to run us long because I know we're fighting dinner time here. So if Zareen, if we could pull the screens up and go through our 3 takeaways from our experts today. And we will start with Darren today. So Darren, from a MSHDA perspective and yourself, what are the 3 things you want our members to take away?
Well, I think it's important for people to realize that with that 1% required down payment, in a lot of scenarios, you can get into a home cheaper than you can get into your next apartment if you're considering first month's, last month's, and security deposit. So home ownership might not be as unaffordable as you think or unattainable. You need to call and check. I didn't touch on this a lot, but we do sponsor home buyer education programs that you can find on our website. They are required if you're using our down payment assistance program, and that will help you learn more about the home buying process, the mortgage process. It'll educate you and make you a better, more informed buyer when you're going out to make the biggest purchase in most people's lives. So take advantage of that. A lot of times that's free, and sometimes you can get that online. And the benefits to the down payment assistance program are simply it gives you more flexibility to make a stronger offer and leverage our resources combined with your resources to hopefully get you into the home that you really want to be in.
Yeah, and I can't stress the education piece enough. We in the industry educate every day because things do change, but certainly understanding that home ownership is a commitment. It's a 30-year commitment, and knowing all of that information before you dive in is definitely very important. What an exciting journey to be on. So, Eric, from a mortgage perspective, what is it you want our members to leave the call with today?
Getting a pre-approval letter from a local good lender that actually went through your income docs, pulled credit, did everything that they were supposed to do. So now when you get a pre-approval letter, it's going to close. You're not going to say 40 days later, like, oh, sorry, I missed something, or they didn't give me their income. Sorry. That's the biggest thing is getting a solid pre-approval letter to me. It's very, very important, and just remember, like I said, this isn't just for first-time home buyers. This is built for everybody to try to take advantage of at this point. And if anybody does call me, I did put my number in there. It's going to show it again, but ask as many questions as you possibly can, because that's what I'm here for. That's what I do every day. That's not something that you got that anybody, is on the call does besides Dan and, but just ask me a bunch of questions. And just make sure if you don't use me, that the person you talk to is very knowledgeable, and can help you get approved for a home.
Yeah, we have 30 loan officers across our brand. Eric is one of them, and a darn good one. But not always do you model match with the person. You are going to be working both with your realtor and with your loan officer in buying the biggest investment of your life. You should definitely be confident in their ability. And I can't stress, it should not be easy in the respect from technology to just get a mortgage, push a button and get a mortgage. You definitely should put some time into this, especially in first-time homebuyers. And understanding that you have somebody local that you can talk to, even drive in and see and meet, is certainly important. So With that, Zareen, if you can advance the next slide. So a few of you have been asking already, how do we get in touch or more info? So more info about this webinar series can be reached at info@michiganfirstmortgage.com. If you want more information about actually starting the process or getting more information about the process you're already in, you can go to our website and look under mortgage. All of our loan officers are listed there with their smiling faces, or you can call 24 hours a day, 365 days a year at our 365 Live Center and choose mortgage or say mortgage, and you will absolutely, will get connected with somebody that can talk to you about mortgages. And then of course, Eric is nice enough to share his information here, his cell phone number and his email address to get directly to him. And any questions that didn't get answered in our chat today, Eric will be reaching back out most likely tomorrow and touching base with you. For Darren, there's the information on MSHDA. So if you guys want to screenshot this real quick before we take it down, you definitely can get any questions you can get answered and move along the home ownership journey for yourself. Next, we want to talk a little bit, just briefly, for Michigan First Insurance Agency. We do cover all of the homes, so we give competitive quotes. We had a record month in January for member quotes, so it doesn't take much time to figure out if you can save money or have you help them through this journey too. So that's how you get a hold of michiganfirst.com/insurance or at their 800 number for Michigan First Insurance. And with that, I thank you all for attending our call today. We're excited to tell you that all of these webinars, and including this one, which will be up probably first thing in the morning, are available at michiganfirst.com/mortgage seminars or -seminars. So thank you for joining. Thanks, Eric. Thanks, Darren. And thanks, Zareen, for all your work today. Have a great evening. Enjoy dinner, folks. Take care.
Thank you.
Thank
Bye.
you.
Quick question about the insurance.
Hello, you had a question about the insurance?